Good morning and welcome to the webinar. My name is Bobby Beatrice and I'm a broker advisor at Cornerstone. I'm joined today by Ted McCooch with Brella, our brand new carrier partner. Ted will be talking about their supplemental health plans and how they can help employees offset medical expenses. But first, we have a little housekeeping. If you have any questions throughout the presentation, please type them in the question box and we will address them at the end of the presentation. My information is on the screen if you'd like to get in contact with me, and don't forget to follow us on social media. We post industry and Cornerstone updates and information. You can visit Facebook, LinkedIn, Twitter, or YouTube to give us a follow. The new and improved AGB portal has launched for all our broker partners as your one-stop shop for managing your book of business through Cornerstone, from carrier and client information to commission schedules. If you have any questions about the new platform and your access, please reach out to your broker advisor or the AGB support team at agbsupport@crnstone.com. Earn more when you sell more. For all the group and individual new business sales between January 1st, 2022 and December 31st, 2022, you will earn points that will bring you closer to a $7,000 cash prize. Register online at www.crnstone.com/cash incentive program. Last but not least, our Q4 medical carrier updates are back. Our first one will be August 25th, starting with Humana, and they'll go through October 13th, ending with Medical Mutual of Ohio. Now, please turn it over to Ted McCooch with Brella.
Thank you, Bobby, and I am going to grab the screen here and just would like for you, if you could, to let me know if you are seeing that screen.
Yes, I'm seeing your screen.
Okay, fantastic. Thank you very much for inviting me, and I'm super excited to speak to you and all of your broker partners about Brella Supplemental Health Insurance. My name is Ted McCooch. I am the Business Development Director for Brella, and as Bobby mentioned, what we do is provide a plan that helps employees and their families reduce their medical expenses. We consider our plan truly supplemental to the health insurance plan, and you're going to find that there are a number of different applications of our product to your clients' healthcare strategies. So once we get through this and you learn more about Brella, you'll see that what we're doing is providing straightforward insurance. And what we mean by that is we've simplified the supplemental health type of plan. We're wrapping around some really, really cool technology that makes the process for the employer and process for the employee much simpler. And we think in total what we've done is revolutionize the supplemental health benefit. First, I want to mention our carrier partner, which is Fidelity Security Life Insurance Company. They are our fronting carrier. What they do is work with companies like Brella to get off the ground until we're ready to take all of the risk. Fidelity Security is A-rated. They're out of Kansas City. They've been around for a long, long time, and this is what they do. They work with companies like Brella in their beginning stages to write some business, and eventually we'll get on our own 2 feet. To give you a source of reference, Fidelity Security is the paper on which IMED writes their vision coverage. Okay, so just like to start off with this survey that was done by Bankrate, and I know that we all know that there's medical expenses that are very, very difficult for folks to meet nowadays. What this survey showed is that 60% of Americans would have to borrow to cover a $1,000 expense. And when we're talking to groups about deductibles and out-of-pocket maxes that run into the $3,000, $4,000, and $5,000 range, obviously this is a big problem for people. We think that our product goes a long way to helping employees with this dynamic. First, would like to talk about what the options are in in today's market. So generally speaking, over the course of the last 30, 40 years, brokers have recommended coverages like accident, critical illness, and hospital indemnity to help employees, quote unquote, fill the gap. But when you look at these products on an individual basis, you see that they're very, very narrow in scope. When you're talking about an accident plan, you have to get into an accident to receive benefits. With critical illness, you're covering just a handful of different medical conditions. And with hospital indemnity, you have to be admitted as an inpatient in the hospital to receive benefits. So by design, they're very, very narrowly scoped. And when we ask the question, are these products truly supplemental? Our answer is no. Why? Because injuries and illnesses, they come in all shapes and sizes, from lacerations to kidney stones to appendicitis to heart attack and cancer. And we show here that no one can predict what medical hardships will come their way. And this is part of what we think is a negative dynamic with the current state of supplemental health plans, where employees are being asked to choose from a critical illness plan or an accident plan or a hospital plan. And what they're actually being asked to do is to predict a future medical event. And obviously, that's impossible to do. So Brella was built to cover a broad spectrum of health issues. And our thesis is, why are we putting together products individually for employees? Why not just bundle all of these types of conditions under one plan so they're not guessing or gambling on choosing the right plan? So with all that said, let's get into the particulars of Brella. Our product covers over 13,000 medical conditions without any accident or hospitalization requirements. So when an employee is enrolled in Brella, it doesn't matter where they were treated, who treated them, what facility they were in, whether they were in an accident, whether they were hospitalized, whether something happened on or off the job. None of that matters. We cover over 13,000 medical conditions. If an employee is diagnosed with one of those conditions, we are going to pay a benefit. Now, we base our benefit on the ICD-10 code. And what is an ICD-10 code? It's a diagnosis code. That's all it is. All hospitals, doctors' offices, urgent care, emergency rooms, they all use ICD-10 codes to communicate to the insurance carrier what type of condition they're treating. So when we look at a medical condition, we very simply verify the ICD-10 code. It's covered under our plan. Again, we pay a benefit. But when we use the term diagnosis, don't think that we pay a benefit upon initial diagnosis and then that's it for a long period of time. We're not only paying a benefit upon initial diagnosis, but we're also paying a benefit during the active treatment phase of that particular medical condition. And I'll get into an example of what that looks like here very, very shortly. We pay a lump sum cash benefit directly to the insured person. They can use that money for whatever expenses they have. We can be implemented with or without a major medical plan. So there is no underlying medical plan required to write a Brella plan. We also do not coordinate with any other coverage that the employee might have. No limitations or exclusions for pre-existing conditions. This is huge. I'll get into a couple of examples of how that works. No medical underwriting ever required. Fully guarantee issue for both employees that are enrolling upon the initial open enrollment and for late entrants as well. And our plan is available for 5+ life groups. So here you're getting an idea of really the foundation of our plan. Extremely broad coverage, extremely simple in that we pay upon a covered condition diagnosis, no pre-existing condition limitations, all guarantee issue. So I talk about all of these conditions, and I know that it can be a pretty intimidating number, all of these conditions that we're covering. But what we do is put them into categories: moderate, severe, and catastrophic. And right off the bat, I want to give you an idea of the types of conditions that we're covering in each category. The reason we're putting conditions into categories is to be able to calibrate the benefit payouts. I'll talk about what those payouts here are in a second, but I just want to give you an idea of the types of conditions that we're covering. So in this category, the moderate category, let's call these the less serious conditions. Now, we cover over 6,000 moderate conditions in this category, and you'll see that we're covering dislocations, fractures, lacerations, what are normally found in an accident plan, but we're also covering kidney infections, benign breast tumors, concussions, dehydration, kidney stones, pneumonia. We have a preterm newborn benefit, ACL, MCL sprains, torn retinas, and TIAs. Obviously, many, many more conditions that we're covering in this category, but what I'm pointing out are the conditions that we're seeing in our book of business, some of the more common conditions that we're paying a lot of benefits on. In the severe category, let's call these the more serious and acute conditions, and you'll see we're covering the more serious types of accidents in this category, but we're also covering appendicitis, benign neoplasms. Most tumors are benign. We pay a benefit for that. Tonsillitis, DVTs, diverticulitis, gallstones, hernias, embolisms, etc. So you're getting the idea here that we're covering conditions that happen to people every day, and these are conditions that are not currently covered under traditional supplemental plans. And then finally, in the catastrophic benefit category, we're covering over 1,500 conditions there. These are the dangerous, the life-threatening conditions like cancer, end-stage renal, heart attack, major organ failure, stroke, the conditions that you'd find in a critical illness contract, but we're also covering ALS, Alzheimer's, HIV, Parkinson's, MS, sepsis, and a lot more. One of the things that I also want to point out regarding our plan is that we don't have the complexity of some of the other supplemental plans in the market, in that we don't have definitions in the background in our certificate. We don't have advanced stage requirements where an employee would have to not be able to perform 2 or more activities of daily living to receive a benefit for some of these conditions. There is no transplant requirement for our major organ failure benefit. We don't have an occupational exposure requirement that some supplemental plans have, which require an employee to prove that they contracted a particular condition or disease at the workplace. And we don't have treatment-free language in our contract either. So very broad coverage. We're covering the types of conditions that are found in other supplemental plans, and we're doing it without all of those back-end definitions and requirements. So that gives you a flavor of the types of conditions that we're covering. Let's talk about the benefit payouts. So what you see here are the benefit payouts that are available when we implement our plan. So in the moderate category, the benefit options are between $200 and $800. A severe, in the severe category, the benefit payout options are between $500 and $3,000, and in the catastrophic category, from $1,000 to $10,000. Now, when we go to market, when we work with you as the broker, when we're talking to employers, what we do is put packages in front of the employees. We call these pre-configured packages value, enhanced, and premier plans. Let's just call them low, medium, and high. And what we do together with you as the broker and your client, is we put in the benefit payouts for a value plan, the benefit payouts for an enhanced and a benefit payout for a premier plan, so that when an employee is being offered Brella, they're seeing one plan or two or three plans instead of having all of these choices, which is really too much at time of enrollment. We're putting in a package of benefits that they can choose from. Now, very briefly on enrollment, we have our own enrollment tool, our own proprietary tool, which you would be able to utilize, or we can hop on to a third-party platform like Ease or Navigator. Our product is very easy to build on those platforms, or we can support a paper enrollment. If you'd like to offer one plan, that's fine, two plans, or three, however you see fit when you're consulting with your client. So these are the payout possibilities. We put those amounts, we plug these amounts into these pre-configured packages. Let's talk about plan funding. Very simple. We can offer a voluntary plan. Employee pays via payroll deduction for themselves or themselves and their dependents. We can offer contributory plans where the employer is contributing on a per employee per month basis, minimum of $5 per month, or 100% employer paid option where the employer is paying for the plan on behalf of the employees and or their dependents. One of the things that you're going to find with the Brella plan is that employers are going to be very interested in participating in the premium. Over 50% of the groups that we've written so far have some or all employer funding. Why? Because our brokers and their clients are seeing our plan as truly supplemental, as a plan that is going to be used by employees, which means it will be a valuable benefit, and the employer is willing to put a premium contribution toward that. Okay, so let's talk a little bit about benefit frequency. And this slide has two components that refer to benefit frequency. The first component are separation periods. So what this simply means is that in the moderate category, we will pay a benefit once every 14 days. In the severe category, we will pay a benefit once every 30 days. And in the catastrophic category, we will pay a benefit once every 90 days. Example, I'm an enrollee. On January 1st, I was diagnosed with pneumonia. I would receive a benefit from Brella. On January 7th, 7 days later, I was diagnosed with a concussion. That's a moderate benefit. That would not be paid. Why? Because the 14-day separation period has not yet elapsed. If that second condition was 14 days or later, we would have paid that benefit. So moderate conditions, we would pay a benefit once every 14 days, severe every 30 days, and catastrophic once every 90 days. Now, it's important to know that these separation periods do not apply between categories. So if, for example, I'm in a car accident and I suffer fractures and injuries or severe conditions that would fall into each category, then I would be paid the benefit simultaneously because the separation periods do not apply between categories. One other item as it pertains to frequency of benefit. So in the moderate and severe category, we have no limit. We do not have a maximum benefit limit in our contract. There's no plan year max, there's no calendar year max. We continue to pay the moderate and severe benefit based on that separation period for as long as that employee has a condition or is being actively treated for their diagnosis. In the catastrophic category, we have a 3-time per lifetime per condition grouping benefit. What's a condition grouping? Cancer, stroke, heart attack, burns, etc. We have 52 condition groupings in the catastrophic category. What that simply means is once we've paid you as the individual insured person 3 cancer claims, we won't pay you a 4th. Once we've paid you as the individual insured person 3 heart attack claims, we won't pay you a 4th. Now, a person that has exhausted their cancer benefit, if 91 days later, unfortunately, they have a heart attack, we would pay that benefit. Why? Because that separation period has elapsed, and that is now, the heart attack is now in a different condition grouping. So very liberal here on the payouts. We had to limit the catastrophic condition benefit payout because those particular conditions in that category have very long treatment paths, and I want to get into the slide that talks about that specifically. So this is a slide that talks about 2 different types of medical conditions and claims that we would pay, and this would give you a really good idea of how our plan works. So this is a hypothetical employee, and unfortunately, this person had been diagnosed with COVID. Now, at time of enrollment, the selection was a $500 moderate benefit, a $1,500 severe benefit, and a $3,000 catastrophic benefit. Now, our plan does not cover the actual diagnosis of COVID, but we do cover a number of the complications. We don't cover the diagnosis of COVID simply because most of the time there is no medical expense associated with it. People may be asymptomatic, or they have mild symptoms and they just stay at home. But when you're talking about the Brella plan, we do cover some of the more common complications like pneumonia, like acute respiratory failure if the condition worsens, and then of course in some of the cases that morphs into sepsis. So I mentioned earlier that the separation periods don't apply between categories. So in this case, this particular hypothetical employee would have received a total of $5,000 because each of those conditions falls into separate categories. So we would have paid those benefits simultaneously. Now let's take a look at what we would do as it pertains to a cancer diagnosis. So again, a hypothetical employee that chose a $400 moderate, $1,000 severe, and $4,000 catastrophic condition benefit. And unfortunately, this person was diagnosed with a breast tumor. Now, since the catastrophic benefit was $4,000, she was diagnosed with a breast tumor, we would have paid her a $4,000 benefit. Now, when I spoke earlier, I mentioned that we pay a benefit for both the initial diagnosis and during the active treatment phase. Now, this employee had surgery, had radiation and chemotherapy treatment for the following year, and what we would have done is paid 2 additional benefits. Again, if you're in active treatment for a covered diagnosis and you are going to exceed that separation period, we will pay you additional benefits. So in this particular person's example, she would have received a total of $12,000 in Brella benefits because her treatment path was quite long. And this is not just for cancer. It could be for any of the conditions that we have in our plan where we're going to pay for that diagnosis. When that employee goes for their treatment and it exceeds the separation period, we pay additional benefits. most of the conditions that we cover in that catastrophic category have very long treatment paths. Cancer, Alzheimer's, ALS, HIV, MS, etc. So we fully expect to pay 3 catastrophic benefits to employees or dependents that are diagnosed with those conditions. Now, I also mentioned that our plan has no pre-existing condition limitations or exclusions. Let's say that this particular employee had been diagnosed prior to the effective date with cancer, and then after she was enrolled, she went in for her cancer treatments. We would have paid a benefit for that. Why? Because her cancer diagnosis that's associated with her treatment is covered under our plan, and we have no pre-existing condition limitation. That's awesome. That is different, and that is really one of the reasons why we're growing so quickly. No pre-existing condition limitations. And when you think about it, as it pertains to an indemnity plan, what we're offering is guarantee issue coverage with no pre-existing condition limitations, and we're covering both initial diagnosis and also active treatment. And this is the reason why so many employers like what we're doing, because there are no questions or confusion around pre-X and the adjudication of claims, et cetera, et cetera. Very straightforward, very simple, and as far as the benefits are concerned, very, very liberal. Okay, so let's talk about the actual claims experience, and we're running ahead, which is great, and I think I'm going to be able to get everybody out of here sooner than expected. So when you develop a simple insurance product, you're able to simplify the claims experience for the employee. Employees can submit claims via paper, our mobile app, or web portal. So let's take an example of an employee that has downloaded our app. They've left the urgent care center. They want to submit a Brella claim. They'd open up the app, go to the claim portal. We're going to ask that employee to answer 4 questions. What happened? What did the doctor say was wrong? What was your treatment? And is there anything else that we should know? We're also going to ask the employee to take photos with their phone of what we call readily available claim evidence. Now, what that can be is the treatment summary that you left the facility with, or the discharge paperwork. It could be a picture of the medication that you were prescribed. It could be a picture of your cast, a picture of your bandage, a picture of your ID bracelet. Anything that we can use to help identify your diagnosis, take a picture of it, upload them, send it to Brella, along with the answers to the questions. You've now submitted a Brella claim. Every one of our claimants, now every one, receives a telephone call from our customer service unit. We will let that employee know that we're in receipt of their claim. We can tell them that potentially the condition that they submitted might not be covered under our plan. We could tell them that there would be additional information we would need to help identify their diagnosis, or we can let the employee know that their claim was approved. Now, most of the time, we are going to be able to identify the diagnosis with the evidence that I just described. Once a claim is approved, we are going to be sending payment to that employee's bank account, PayPal, or Venmo within 72 hours. Now, this is awesome. Why? Because with traditional supplemental plans, you have to wait for the EOB, which comes 5 or 6 weeks later. You have to match it up with a claim form, send it to the insurance company, and then a week or 2 later, you're going to get your payment. That process can be anywhere between 6 and 12 weeks. Our process is literally days, and our groups and employees that are covered under our plan love this. if there is anyone out there that is writing self-insured plans and has a relationship with a third-party payer, we are also able to take claim feeds from third-party administrators and be able to integrate our eligibility file and covered conditions and be able to identify the folks that have payable claims and pay claims on members' behalf without any of their intervention. So we do a lot of work with self-funded plans and third-party administrators to make the claim process even easier. Okay, so very quickly want to get into some sample monthly costs. And I'll talk a little bit about here in a minute the types of the information that we need for a proposal. But let's talk about sample premium. So this is assuming a 20 life group, and you'll see that we want certain information on the group to be able to develop pricing. So here is an example of a 100% employer paid plan for this 20 life group. The payouts are $200 in the moderate category, $500 in the severe category, and $1,000 in the catastrophic category. If this particular employer wanted to pay the premium, it would be $23 per month. I'm not showing dependent premiums here, but I'll let you know that employee and spouse premiums are double the employee premium, and family premiums are triple the employee premium. That's how we do it. If the employer wants to pay for a $500,000, $2,000 package on behalf of the employees, that would be $46 per employee per month. And I'll just mention that we do quite a bit of base buy-up, where the employer is buying a base plan on behalf of the employees, and then the employee can buy up to adding dependents, or they can buy up to a higher level of coverage. Now, when we are writing a voluntary plan, or where the employer is contributing a minimal amount to the premium, then we're going to show an age bracket rate. And the age brackets that we use are under 50, 50 to 59, and 60 plus. So in the voluntary premium scenario for this plan design, employees under 50 would be paying $16 a month, 50 to 59, $38 a month, and 60 plus, $58 a month. One thing I'll mention, we get very, very good participation from older age employees. Why? Because when they see the conditions that we're covering, in many cases they have existing conditions that we're covering, or they've had them, or their spouse had them, and when they find out how we pay claims, both upon the initial diagnosis and during the active treatment period, they see that our plan is a really, really good value for the benefit that we pay. So our older age participation is quite good. This example here is the employer contributing $10 per employee per month. And what you see here in the premium is that we take a pretty big reduction on the base premium when there's employer contribution. So this $58 60 plus premium goes to $40 with a $10 employer contribution. The $38 premium goes to $24, and the $16 premium goes to $4. So a discount when the employer is contributing, and then employer paid is the lowest premium that we can offer. Okay, so some things that we should know. So I went through a couple of these things, but I want to touch on a couple of points. No exclusions for limitations of pre-X, we covered all of that. Coverage is portable. Employee terminates, they can take the plan with them, pay Brella directly. We do not require that the master contract be in force for the employee to keep their individual plan. Coverage is 24-hour, no exclusion for on-the-job accidents or injuries. We need 20-hour minimum eligibility. The plan is HSA compatible. We cover newborns for the first 31 days without dependent election, which means that if I'm an employee or an employee and spouse and that employee has a child, that baby gets coverage for the first 31 days. There's no premium that's paid. We cover claims. If the employee wants to continue coverage, they would have to pay the premium after 31 days. Grandchildren are eligible dependents, which is really cool, and we get a lot of mileage out of this. You have an employee, they can be single, they can be family, it doesn't matter. If they have the eligible grandchildren, they can be brought onto the plan. The grandchild does not need to be dependent on the employee they don't need to be financially dependent. They don't have to live in the same household. Eligible grandchildren can be put on the plan. Underwriting, as I mentioned, no medical underwriting ever. And what we mean is really specifically for the late entrants, where typically on a supplemental plan, if you're a late entrant, you'll either have a pre-existing condition clause put on you, or you would need to answer medical questions. We don't do either of those things. We allow late entrants to come on. They'll have a 60-day waiting period. That's all they'll have to, that's the only limitation there. So if I come on the plan late on April 1st, I'll pay my April and May premium. I'll start receiving benefits starting June 1st. Participation requirements, 5 to 9 lives, 100%. So in that smaller segment, we would require that all eligible employees are enrolled and the employer has to pay the premium. We did voluntary in that segment early on, but it was a lot of work. We weren't getting participation. So 5 to 9 lives, employer paid. 10 to 99, we need the greater of 5 enrolled or 10% of the eligible employees. So if you have a 30 life group, we need 5 enrolled. If you have a 70 life group, we need at least 70 enrolled. And then 100 plus lives, we need 10 to enroll. And then I mentioned the underwriting credits when we have employer contribution. Okay, so quote requirements. Hopefully you're all excited and ready to quote with Brella. What you'll need to send through is the employer name and address, SIC code or industry, the effective date, and a census with dates of birth and gender. We don't need dependent dates of birth. And with that information, we are going to be able to quote a plan. So that's it. Bobby, I don't know if right now would be a good time either to answer or take questions, or if you want to show the bonus slide.
Yeah, let's show the compensation program. Jess, can you switch it back over to me? All right. Hopefully everyone can see that. This is our producer compensation program. Ted, if you just want to walk us through what this is.
Absolutely. So this is a bit of an eye chart here, and I apologize for that. So first I'll mention that the compensation, the standard comp is 20% flat all years. This is our bonus plan. This is paid over and above the 20% compensation. So I'll have you take a quick look at this Schedule A here, and I'll get into this verbiage here in just a minute. So we pay a bonus based on participation results and also employer contribution. So let's take an example of a 50 life group that you enroll with Brella, and we get participation between 20 and 29%. So all you would do is go down to the left side column here, 25 to 99 is a 50 life group, 25% participation. This would yield a flat $200 bonus to you, and this is paid from case one. We don't do end of year accounting. You don't have to wait for this bonus to be paid to you. 30 days after the employer is paid their premium, we are going to be paying out this bonus. And of course, the higher the number of lives and the higher the participation results, obviously the bonus goes up. So Bobby, I'll ask you to go to that next page of this document, and then we'll take a look at the employer funded boosted incentive. Obviously, we want to incent employer funded because that always helps participation. So if you look at that left column where you see the employer contribution per employee per month, there are three categories: $5 to $9.99, $10 to $19.99, and $20 plus. You go over to the number of eligible lives, and that will give you the employer contribution bonus amount. So in my example of a 50 life group, if you were able to obtain a $10 employer contribution, the bonus for that particular group would be $200. So $200 for the employer contribution component of the bonus, $200 for the participation component of the bonus. You are now going to receive $400 from Brella over and above your standard commission. So Bobby, I'll ask you to go back to that first page, and I'll talk about case credits. So you see this Schedule A, Schedule B, and Schedule C. When you write a plan with us, it can be either voluntary or it would have some level of employer contribution. A voluntary plan equals 1 case credit. A contributory plan equals 2 case credits. Let's say that you've written your first 3 cases with us, 2 employer funded plans. That would be a total of 4 case credits, and a voluntary plan. That would now be 5 case credits. So you went through Schedule A. That next case that you write will be in Schedule B, where you see there on the top left 6 to 10 case credits. So that same group that you're writing, the 50 life group with 25% participation, you'll see that that bonus has now gone to $300 for the participation component of the bonus. And obviously, you'll see in Schedule C, when you go up to that 11 plus case credits, your bonus is even higher. So we want to incent participation, we want to incent employer contribution, and we think that we're really doing this in the right way by paying a bonus on both, and also paying you within 30 days of that first premium payment rather than waiting for end of year accounting. One last thing I'm going to mention, Bobby, and then I'll be done. When you get to your Schedule B, all of your payouts will be retroed back to Schedule A. So whatever you've written in those first 3 cases in my example, we are going to now pay the difference between Schedule A and Schedule B on those groups. So there's a retroactive payout to you once you hit that Schedule B. So really awesome bonus plan, in addition to the 20% flat compensation. So that's what I wanted to mention.
Awesome.
Thank you.
I think we have a couple questions here. So the first one is, will Brella cover age 65 plus employees even though they're on Medicare?
The answer is yes. What we might do based upon the demographics of the group, we might include a 50% at age 70 cutback. But with our plan, it doesn't matter if you're on Medicare, you're eligible, we'll pay your benefit.
Okay. Second question is, if some employees are on a Medicaid coverage, are they eligible for this?
Yes. Yes. Yeah, we don't ask for any other information about other plans. They're a Brella insured. They have a covered condition. We pay the claim.
And then it looks like the last question is, what states is Brella licensed in? I know Cornerstone directly works with Ohio, Kentucky, Indiana brokers. Is this just Ohio, or are you also in Kentucky and Indiana?
Ohio, Kentucky, Indiana, Wisconsin, Texas. We are in 22 states right now, mostly in the Midwest and the Southeast. If anybody has a prospect in other states, just let me know, and I'll let you know whether we're approved in that state yet or
not. Sorry, one more question. What about New York and Florida? Are you located there as well?
New York, no, and it's highly unlikely that we'll be approved in New York for various reasons. Florida, yes, we're approved and we're writing business in Florida.
Bobby, I think we should add that it's also important, you're going to just send these quote requests directly to the quoting mailboxes in your geographic area, like you do regular medical, dental, vision proposals at this time.
Awesome.
And then another question is, if your group is domiciled in Ohio, but you have employees in other states, how does that work?
Yeah, good question, and I should have mentioned it. So this is a true group domiciled product. So as long as the group is domiciled in Ohio, regardless of the state where the other employees are working, they're eligible and we will cover them.
Okay, what does the appointment process look like?
It's very simple. We just send a link to you, and included that link goes to the Fidelity Security appointment site. You answer a few questions and you're appointed. It's usually a 3-day process for the appointment to be finalized.
You'll do that through Sandy, just like you do now. So Sandy will have the link, and that way we'll know that you are on board and have been approved for putting and selling the product.
And we don't need appointments, just to let everybody know, we don't need you to be appointed to quote. When we're ready to sell a group, or if you want to do the appointment, proactively, we can certainly do it. But to receive proposals, we don't need you to be appointed.
Thanks.
Okay, I think that is everything. Again, thank you so much, Ted, for your time today.
Thank you very much. Appreciate everybody's time. Hope to talk to you soon. Have a good day, everybody.